Welcome to the Skilled MBA Accounting and Finance Case Study Series. At Skilled MBA, we explore the strategic and operational challenges of extending financial services to underserved markets. Today's case focuses on rural branch operations in India, where success requires more than just financial expertise. It demands deep local understanding and operational adaptability. Key highlights include the role of branch managers, loan officers, and compliance teams in ensuring smooth branch functioning, navigating cultural nuances, including language, trust building, and social dynamics in rural communities, understanding local economic conditions to design relevant lending products and repayment structures, ensuring adherence to regulatory frameworks, while maintaining operational efficiency in low infrastructure areas, developing community engagement strategies to drive financial inclusion and sustainable impact. This case highlights the intersection of strategic operations and local insight in rural banking success. Rural branch operations in India involve complex dynamics. Key players include branch managers, local farmers, and self-help groups. The context is shaped by agricultural lending, government initiatives, and non-governmental organization facilitation. Compliance failures can lead to severe consequences, emphasizing the need for robust protocols. Understanding these elements is crucial for effective financial inclusion and sustainable rural banking. In rural Haryana, Safe Bank of India plays a pivotal role in agricultural lending, crucial for the local economy. Self-help groups act as vital community finance platforms, while government initiatives push for financial inclusion. Non-governmental organizations often mediate between banks and borrowers, placing branch managers under dual pressure to meet targets and ensure compliance. Seema, a branch manager at Safe Bank of India since 2016, is ambitious and well connected with local non-governmental organizations. She exceeded loan targets by prioritizing non-governmental organization referrals over standard bank verification, bypassing documentation protocols. Her actions, driven by government pressure, led to significant compliance failures, highlighting the risks of over-reliance on external recommendations. Seema's approach led to significant compliance breakdowns. Key documentation lapses included incomplete Know Your Customer verification and missing land records. Verification shortcuts were evident as no field visits were conducted to verify self-help group activities or member income. There was an over-reliance on non-governmental organization recommendations accepted without independent assessment, undermining the bank's verification processes. The branch faced a surge in non-performing assets, prompting an internal investigation. This rise in non-performing assets could jeopardize the bank's financial stability and erode community trust, highlighting the urgent need for stringent compliance measures in self-help group lending practices. Pre-sanction due diligence in self-help group lending involves verifying self-help group formation documents, checking 6 months of meeting minutes, and confirming lending history. Member verification requires Know Your Customer completion, income verification, and land record checks for agricultural loans. Field assessments include physical verification of self-help group activities, project viability assessment, and evaluation of repayment capacity. Compliance is crucial for institutions, safeguarding financial health, enhancing credibility with regulators, and minimizing fraud risks. It fosters sustainable lending. For communities, it ensures responsible financial inclusion, prevents over-indebtedness, and builds trust in banking systems, supporting genuine economic development. In rural finance, compliance acts as a protective shield, not mere bureaucracy. Government pressure for rapid fund disbursement can compromise thoroughness. Non-governmental organizations, though vital for community ties, cannot substitute bank verification. Performance metrics, emphasizing disbursement numbers, risk encouraging compliance shortcuts. Balancing these external pressures is crucial for maintaining integrity in rural finance. Mandatory independent verification is crucial. Field checks must be separate from non-governmental organization assessments. Complete documentation chains ensure no loan is processed without full paperwork. Regular compliance audits prevent issues before they arise. Digital record management enhances documentation and verification. Staff training programs keep personnel updated on compliance. Balanced incentive structures reward portfolio quality over loan quantity. SEMA violated key compliance protocols, notably bypassing mandatory independent verification, leading to severe consequences. Non-negotiable checks include thorough documentation and regular audits. Managers must balance relationship building with compliance by fostering a culture of integrity. SafeBank could have prevented this breakdown by implementing robust digital record management and comprehensive staff training programs. Implementing technology solutions enhances compliance. Secure cloud storage ensures all loan documents are complete and accessible. Biometric verification, linked to Aadhaar, prevents identity fraud. Geotagged inspections provide location-verified field visits with timestamps and photographic evidence, ensuring transparency and accountability in operations. Effective compliance transcends rules, fostering a culture where staff grasp the purpose of procedures. Leaders must consistently model compliance behavior, empowering team members to voice concerns. Celebrating compliance successes and discussing case studies regularly highlights real-world consequences, reinforcing the importance of a robust compliance culture. Compliance is the cornerstone of sustainable lending, ensuring financial integrity. Proper documentation and verification safeguard all stakeholders, while technology enhances compliance without compromising efficiency. External pressures should never justify shortcuts. In rural finance, trust must be verified through rigorous procedures, reinforcing the importance of compliance as more than just a protocol. Thank you for your attention. For further insights and resources, reach out to Skilled MBA at +91 87553 00795 or support at skilledmba.com. Visit our website at https://skilledmba.com/ for more information.